Morning, everybody. Great to see you here. So I'm Ben Laidler. I'm the market strategist here at eToro. I'm going to talk about three things very quickly today. One, how AI is driving stock markets and how I think that's going to continue. Two, how the leadership of this adoption in stock markets is retail investors who are very much the new kids on the block and very misunderstood. And thirdly, what this all means for the investment industry. So this is markets. US stocks, 2/3 of global stock markets, completely supersized. Within that, it's all about the so-called Magnificent Seven, these big tech stocks, Apple, Amazon, Nvidia, Tesla, and on. You can see there on the chart on the left, just this massive divergence in performance this year. It's all been about these big tech stocks. What do they have in common? It's all been about AI. It's all been about AI adoption and what that is doing to their profits. That's left the other 493 stocks in the S&P 500 absolutely in the dust. And it's been completely fundamentally driven. These 7 tech stocks have grown their profits by 50% this year. So there's no hype here. This is all profit-driven reality. And the poster child for that is on the right-hand side, which is Nvidia. It's a $1 trillion market cap stock today. I don't need to explain, Nvidia to you. This is the picks and shovel sort of leader of the AI revolution. What this chart shows you, that top line is expectations for Nvidia's profits over the next year. That number has tripled. And what that means in stock market terms is that this company is cheaper today than it was at the beginning of the year. So again, no hype. This is dollars and cents reality in the stock market today. This is tomorrow, or 2024 if you want to look at the left-hand chart. This is the biggest conundrum or contradiction in markets today if you're an investor. We're going to have slower economic growth in the US next year, but we're going to have dramatically higher earnings. This is not how things are meant to work. How do I explain that? Various reasons. Inflation's coming down, that's helping profit margins, there's a low base effect, etc., etc. But the biggest one is AI is driving a profits wedge in here between what's happening to the economy and what's happening to company profits. And this is essentially going to be the trickle down from what we've seen from the Magnificent Seven early tech adopters this year to the rest of the stocks next year. And the big hope, if you look at the right-hand charts, this is US economic growth over the last 60 years. And if it wasn't obvious enough, I put a nice green trend line in there. Growth has been slowing for years. Why? Because productivity has been slowing. And what AI holds out the opportunity for is that we break this productivity paradox that we've lived for the last couple of decades, and that AI can drive productivity growth across the economy as it gets more broadly adopted, and we can have stronger growth without higher inflation. So that's the stock market. The early adopters here have been retail investors. These are the new kids on the block. This is the fastest growing segment in stock markets today. It's also the most misunderstood actor in stock markets today. Why have they been the early adopters on AI and tech? The number in the middle. They're 31 years old. That's a decade younger than you see in traditional finance, and that has 2 huge implications. On the right-hand side, it drives an early adoption and understanding of tech. They're digitally native, they're Gen Z, they're millennials, they were brought up with tech, they own a lot of tech stocks. They also own a lot of crypto, but because of this age, this early adoption. It also means they're not retiring for 30, 40, 50 years. They have time in the market. They can take more risk, they can compound, they can make losses back. This is why it's completely rational that they're running more risk than lots of other people. And this means that when you look across our platform, we have 34 million users, 100 countries. We've just got our UAE license, so hopefully a few more here. But what we see, these are the top 10 holdings. It's all tech. It's all big tech. It's Nvidia. It's Microsoft, et cetera, et cetera. So this is where the sort of rubber meets the road for retail investors. And then just the final point I wanted, what does this mean for the investment business? Basically, AI is coming after our business. When we ask retail investors, these 34 million, what they think about AI, just to give you a little snapshot, if your investment portfolio is pretty up close and personal important, 50%, more than 50%, are open to letting AI run their investment portfolio. There is a lot of trust out there, and these numbers are drifting higher. And it's not just those 18 to 34-year-olds early adopters. The numbers are above 50% for basically all cohorts, apart from people nearly my age. And the reasons are across the board. There's the technologists in there, there's productivity, they think it can provide a better service, it can make better investment decisions, and that it can be cheaper. And then just to sort of delve a little bit into us as a big online platform, I think this speaks to the general purpose nature of the technology. We are using it everywhere. We're using it across marketing. We're using it in the investment business with new investment portfolios, which you can go and see on the site today. We're using it on the trading portfolio, and we're using it in education. So really, it's across the entire customer journey, and we're really just getting started. So I just want to leave you those 3 quick points. AI, I think, is driving stock markets, and it's here to stay. That retail investors are the new kids on the block, and they've really taken the early adoption lead here. And that thirdly, this is coming after our business if you're in the investment world, and it's coming for it really across the board. Thanks for your time. Thanks very much.